let's jump right into number one. Number one is you need 20% down. That is absolutely false. And why is that false? Well, because Fannie and Freddie, the two entities through the government that fund the loans, will allow you to put as little as 3% down. Now, there are caveats with those 3% down, but just for this example, 3% down is your lowest. But actually, normal is about 5% down. So anywhere between 5 to 20% down is what you're going to be expected to put down, but you definitely don't need 20. Now, here's a little bonus tip. There is PMI that will fall off at 80% loan to value. That is lower as you get closer to that 20% down payment. So make sure you meet with your originator and walk through what the best option, especially shopping around that PMI. Number two, you need perfect credit to get a conventional mortgage. That is absolutely false as well. You can get a conventional mortgage as little as 620 credit score. Now, I'm not telling you to go out with a 620 credit score and demand a conventional mortgage because there are going to be a lot of adjustments to your interest rate. So my best advice to you, get your credit score higher so you have a better interest rate, better PMI examples, but it is not impossible to get a mortgage with a 620. Now, I know I had mentioned about lower down payments before. You may want to caution that and maybe look at a better loan like a USDA or even an FHA loan. Or if you're a veteran, definitely go for the veteran loan. Number three, conventional loans are going to be more expensive than any other loan out there. This is actually not that true. And the reason behind that is there are caveats to it. For example, like FHA and VA and USDA, there are upfront premium costs that will increase your loan amount, whereas conventional there is not. And then with your other government loans like FHA and USDA, the PMI sticks with your mortgage for the length of the mortgage until you refinance it into a conventional loan or sell the property. So kind of remember that when it comes to how expensive it's going to be. Again, having that conversation with your loan originator will go a long way. Number four, you can't buy an investment property with a conventional loan. So this is where everybody gets confused when they think investment, they think commercial. However, conventional loans can be utilized to purchase investment properties and second homes. However, when you're doing an investment property, you do have larger down payments. You can go as little as 15% down. However, it is recommended that you shoot for 25% down on a single family unit. And then you mandatorily have to put a 25% down payment on a 2 to 4 unit property. But it is maxed out at 4 units. So remember that, especially if you're going to get into the investment side. This is our last and final myth. Conventional mortgages take so long to get approved for, and they require more time. That is actually not true. It's all really dependent upon the scenario and the situation, and if you've been pre-underwritten or not pre-underwritten, and if you have all your documents together. That goes for any loan. Any loan can go as quickly as 8 days. That is the shortest amount of time that you can have on a mortgage loan that is a qualifying mortgage. So just remember, if you're getting ready to buy a house, you want to make sure that you have everything in line. There's a ton of other videos and other information about what you would need to get approved, so make sure you check those videos out. So there you have it. Those are the top 5 myths that people believe when it comes to conventional mortgages. Now, if you found this video helpful or you know anybody that's looking to buy, sell, or invest in real estate and you want to share this video, I would greatly appreciate it. But most of all, I would love for you to click that subscribe button down at the bottom and follow us through our journey of making home buying that much easier. Again, my name is Michael Piccola. It was a pleasure working with you. We'll talk to you soon.